Last year I bought 7 properties. I didn't use a bank once.
Private money's great.
I absolutely hate filling in an application with a bank.
Problem with property development, cash flow is terrible. You get the paydays are great, but sometimes it's 2-3 years in between drinks.
One of the things I love about property is there's just so many ways to make money, and
Naturally, subdivisions make more sense for me.
how many sites can you actually hold when you haven't got all the income coming in from your existing stock?
So you have to be able to cash fund that, have the holding costs, or you need to have someone that can.
To find gold, you must dig through a lot of dirt. Hi, I'm Andrew Wright, Principal of Professional Southport, and this is the Andrew Wright Property Podcast. I've built a multi-million-dollar property portfolio, delivering a 7-figure annual rental income, and led my real estate team through thousands of sale and lease transactions. In each episode, I share real deals and strategies that will help you find, fund, and operate profitable property deals. The aim of this show is to provide education and build a community of like-minded investors who can collaborate, share insights, and help each other in each other's journeys. You can make excuses or you can make money, but you can't do both. So come and join us. G'day and welcome back to the Andrew Wright Property Podcast. Today's guest has built a career around structuring deals creatively, using strategies like long settlements, call options, DA uplift, sweat equity, and joint ventures to control profit from projects without necessarily needing all the capital up front. Carson Bolt is a developer, mentor, and the host of the Unemployable Property Podcast, built around the philosophy of find, fund, and develop. What I love about Carson's story is he didn't just come from traditional background in property development. As you may have heard, he started out cleaning carpets. Today we're going to go deep into conversation about how to finance development deals, how to structure opportunities creatively, and real-life examples of deals Carson has actually done. Carson, welcome to the show.
Thanks for having us, Andrew. It's good to be here.
Tell us about where you live, your family, and any interest in sport.
Yeah, grew up in the sticks of WA, farming background, and then found my way onto the Gold Coast, met my wife down Byron Bay, and then trickled up here. You mentioned I was carpet cleaner. A lot of my work was up here, and I was travelling from Byron, so we ended up landing here in the end. And then sport-wise, being from WA, love my AFL. So boys play AFL. I didn't really have a choice, but now I've got them into that, brainwashed them, which is good. You'll see the Eagles hat, unfortunately, where I'm struggling a bit at the moment. But
don't worry, I'm a Titans supporter in rugby league, so I know how you feel.
Well, there you go. But I love my footy, and yeah.
How many kids?
I got 3 kids.
3 kids. Oh, that'll keep you busy.
Yeah, my daughter dances, 6 days a week and does musical theatre and bits and pieces. So it's a pretty busy household, running around chasing those 3 around pickups and drop-offs, but wouldn't have it any other way, mate. It's good fun.
Yeah, fantastic. Mate, you have transitioned from basically having a job to property development, but now you've already transitioned to a sort of a higher cause in mentoring other property developers. So this, I went down to a function that you guys put together called Find, Fund and Develop down here in Burleigh a couple of months ago, and there's about 500 people there on stage, and you've transitioned into education and mentoring people. Tell us about how this unemployable property came about.
Well, it's funny. I've been around the property circles, I suppose, going to all the events, trying to learn as much as I could, and that was great. It opened my eyes up to what was possible, because you don't know what you don't know, obviously, at the end of the day. And then after kind of 10 years of being around that world and everyone just patting you on the back and saying you're doing a great job, we're kind of like, I want someone to look at what we're doing critically, I suppose. So we actually, Unemployable media guys were doing some business coaching. Like, it was not so much property related, but they'd done a little bit of development, a bit of property, and they're pretty business savvy guys. So,
Yep.
like, it's probably not a bad idea to get those boys to look at what we're doing and see, if there's any gaps, if we've got any blind spots. And so we basically joined their business coaching for 12 months, and then they kind of got to see what we were doing a little bit. And a lot of people had a lot of interest in property and getting ahead through property development. So we said, hey, do you guys want to, why don't we put on a bus and we'll just take the rest of the, students around. And I think after that, they kind of saw what we were doing and just went far out. Like, the next week they said, hey, do you guys want to run unemployable property? And we're like, oh, not really. Like, they asked us to come on a podcast and we were like, look, we just like to fly under the radar, not super keen on getting smashed in the comments, but then at the same time, we've always kind of helped out if people reached out to us randomly. I'd always try to give as much time as I could, but it was actually getting to the point where it was taking up like 5 hours a week. And I was like, and then this opportunity came up and we're like, you know what, if we're going to do it, might as well do it properly, because I'm kind of, it was fun, helping out a person here and there, but then you're getting hammered all the time. It was like, okay, I've got to try and find some balance here. So that's why unemployable property got birthed, and we're, still trying to work our way through, talking in front of people on stage, which I'm not overly excited about, but no, I live and breathe property as you do, mate. So it's that makes it easy. So.
Yeah, right. Okay, so like just on that mentorship program, you're still looking for people listening here. Can they still approach you now, or are you sort of your book's full? What's the deal?
Yeah,
there, mate?
we've got we're still bringing in people at the moment. We've got another great guy that's come on board to help out with the coaching. He's actually a partner in our development business, Salt. He's actually one of our coaching clients originally. Now he's come on as a coach. Like, he was PMing over $500 million worth of projects himself personally for a big company in Melbourne. So, like, I guess where we differ is not just, teach you how to find a site. It's like, we're good at the execution piece. Like, Shannon, my business partner's civil construction background for 20 years. Sam's been a PM, finance background, so I think we do a pretty good job on actually taking people through the whole life cycle of development. I get people from other coaching programs that ring up and say, hey, I've got this site. It doesn't stack up. What the heck do I do now? I haven't done the full homework. So I think we've got a really good crew to take you all the way through that process, because it's one of those games. Yes, it's incredibly lucrative, but if you get it wrong, you can get tipped upside down really quickly. So that's why you mentioned at the beginning of the pod, we do longer terms and due diligence and options and all those things. It's all about trying to de-risk the project as much as possible.
Yeah. I haven't, had a mentor like yourself in this type of program, but tell us about, like, when you're signing your clients up, or when clients are looking for your mentorship. Like, the way I see with property development, you can get out early just by getting a quick DA uplift and flicking sites.
Yep.
In your case, you have the advantage of a partner who does civil construction, so you can go to that next step and add a bit more value before you sell. And then if you wanted to, you can go the next step again, which you're starting to do with this site in Coomera, where you actually do the ground up construction. So are your students targeting all of those different strategies? Like, obviously some people might not have the funds to do ground up construction, but where are you trying to push your students to? And is it just purely a function of their financial capacity to go all the way, or a quick DA uplift and flick?
For me, it's more about the feasibility. I'm really unemotional about it. I think naturally subdivisions make more sense for me. Your profit on cost, your margins are generally going to be more healthy, because the construction piece is so expensive now. Whereas your civils haven't quite had the increases. Yes, we've had some, but not to the same degree as what some of the built form has. And you get a lot more variations. Like, I know some of the big end of town that have done all the quantity surveying reports. They've done, talk to builders, had everyone quoted with an inch of its life during the due diligence piece, get the approved plans, go, and then it's like a 50% increase, and they've done everything by the book, and you can still get it wrong, whereas, yes, you can still have that with civils. You can still have, hit rock, and you have geotech problems, but for the most part, you don't get those huge swings. So that's why I like land. But yeah, to answer your question, whatever makes sense. Like some of our smaller deals, we did one that we sold last year where we just bought a block, cut in a pad and on-sold it. So just for a bit of cash flow, made a few hundred grand just because it was a sloping bush block that nobody could see the vision of what it could be just by a lot of mum dads, they're time poor. So if you can, you know, we get paid to solve problems is how I see it. And if it's people put it in the too hard basket, they're the sites that we go after. So, yeah.
Okay, and before we move on to finding and funding and developing, I'm curious to learn myself from you because I'm constantly thinking about my capacity to hold development sites. So I'm mainly an investor, but I'm a real estate agent. I do part-time property development, and you're full-time.
Yep.
And I own 3 sites now, which are empty blocks of land. They're negative cash flow. And just yesterday I wrote out I transferred some money to pay for another engineering report that I didn't initially think I had to do, but the council came back wanting more information about this, and the town planner told me, "Oh, Andrew, you've got to go and get another engineering report on the noise that might be affected if you have trucks coming into this place, and another engineer's report for this and this." And when I first hired the town planner, he says, "Oh, you need to engage engineers for this and this." And, it's going to cost X. And then you get all these requests back from council, and you've got to go and do all these other reports. So I'm writing checks out to 3 town planners, and then engineer for this, engineer for that, and there's no money coming in. But I can fund that because I'm still working hard as an agent, and I have a commercial property portfolio that brings in income. But I'm thinking, well, can I actually afford to hold a 4th development site? Now, I've got 3 there that are just costing me money, and there's no payday yet. How have you progressed with your business partner, Shannon, and this new gentleman that's joined you, as far as working out how many sites can you actually hold when you haven't all got all the income coming in from your existing stock?
It's a good question, and it's one of those ones that it took me a while to wrap my head around. So early days, I think like the first 8 to 10 projects we did with joint ventures for that exact reason. Like I didn't have any money at all. I was a broke.
I've never got money.
Yeah,
it's all gone.
Well, that's right. So it's problem with property development. Cash flow is terrible. You get the paydays are great, but sometimes it's 2-3 years in between drinks. So you have to be able to cash fund that and have the holding costs, or you need to have someone that can. So that's why we did a lot of joint ventures initially, where we actually weren't putting in a dime of the money. We found the opportunity, would take an appropriate cut. Early days it was smaller. These days it's a bit bigger. And then we'd just execute the project and share in the profit. So I'd find someone that actually had the capacity to do that. And to your point, one of the things that we do with a lot of our coaching clients is making sure that, hey, your plan might say it's 50 grand to get the DA, and make sure you put 80, 100 grand, because there's always those variations, especially during the request for information phase, that none of that stuff's quoted on. It's all hourly rates, and it can add up very quickly, like you say. So, and to the other point, on holding a lot of sites, we've got 8 sites that we hold now. We've only got 1 that's a JV, and all of it is capitalised interest. So we're not servicing any of the debt. So yes, it's accruing. We're still accruing. Yeah, we're still paying the engineering consultant fees. So basically, we have been paying ourselves a wage that me and Shannon can live on, but we haven't taken a chunk of cash out of the kind of 5 or 6 years we've been going full time. It's all the profits are just rolled into the next one, and we've just been building the portfolio that way. So yes. So that's how we've managed to do it, and we've got enough equity and bits and pieces there now to kind of allow some of these private lenders and banks to come in, and we can hold sites. We've got the capitalised interest, get the DA approval, and then we generally get a big uplift, and then that normally has got enough to cover us through construction as well.
So whether you're just starting out or a billionaire, eventually you're going to get to a stage where you're sort of capped out with your capacity to buy. So if you and Shannon and your new business partner, your skill set, one of your greatest skill sets is finding deals. So you've got 8 there at the moment. If number 9 comes tomorrow and you find an awesome deal, are you going to go and hit Shannon and your other partner up to go ahead with that, or are you going to try and find a way to add value to another developer and flick it on? What are you going to do if number 9 comes tomorrow?
It's a great. So we've been having conversations. So we're working with a couple of high net worth individuals that will either come in as a JV if we find a really big one, or we have a gentleman now that's seen what we're doing. He will actually settle a lot of our sites for us. We pay him a really high interest rate, and once again, so we've got a tap that we're using at the moment. It's a genuine win-win. He's just got money sitting in the bank where he's not earning a great return because he's pretty risk averse, but he's comfortable with what we're doing. So he's happy to settle the sites while we get the approvals. And this has only come recently. Now we've got some runs on the board.
Yep.
Or we continually on sell sites. So we've typically sold like 30% of our sites. We then sell at DA level. Like literally today, this morning, before I came in here, we've got a site down Lismore Way. We paid $2 million just under a couple of years ago. I just had a bank valuation that got finalised. It's got the draft this morning at $11.5 million. So we had a massive uplift by improving the DA, and we're about to go for a rezoning process. We're looking to flick that site on. So we're always, we don't want to be in debt up to our eyeballs. So yes, we can play the long game on some sites, but other ones will drop out, take some quick money, and then pick up another site that we want to develop. So we're always looking at it. And the good thing with Sam that's come on board, he's got a really good financial background. We've now, because
he's a very good talker too. He's pretty smooth, isn't he? The way he's like very professional.
Yeah, young guy in his 20s, but he's a lot smarter than what I am. And like his feasibilities and cash flow projections, we'll get into a point where we're like, we need someone to kind of help us with a lot of this. So yeah, there's a lot of ways to kind of manage it, but we don't want to be debt on debt. So we'll drop a project if we want to bring in another one, or we'll find a partner to actually do it with, because we're kind of at capacity now. So yeah, to your point, if I find an amazing project, I've either got to get really, really long terms and we'll run the DA, where literally we're trying to pick one up at the moment where we've got a 2-year settlement is what we've proposed to the vendor. Yeah. And we're looking at buying it in 2 parts as well to try and help with cash flow as well. So it's just getting creative with those strategies, because yes, we can't take on another project right now, but if they're happy to settle in 2 years and we're paying an inflated price, then it's a win-win.
Yeah. So I'd imagine I was listening on the way here to Davey Hamilton, Everything Property. He's a good operator, great podcast. After you subscribe to mine, subscribe to Unemployable Property and Everything Property. There's a couple of plugs. And I was just curious, second time you listen to a podcast, sometimes you hear things that you didn't sort of pick up in the first one because you might have been having other thought or something like this. And Dave asked you a good question. You bought a site from a lawyer from memory, and it was sort of too big for you to fund at that time, and then you basically asked to rescind the contract, enter into a new one, and sell it off to someone else. But it wasn't actually your entity. You were basically selling it to someone else for an uplift there. And from a risk management point of view, have you learned something from that? Because you didn't really protect yourself, did you? In that you could have just lost the deal. That's
right. And sometimes it's people like, well, they can say no. And I was like, well, if they hadn't, I wasn't going to do the deal at all if they hadn't. Yes, there was some risk of losing the deal when you try and swap the contracts out, but he wasn't going to give me an option, so I couldn't have a nominee clause. So there is no other real mechanism like you've got in Victoria. We can have a nominee clause and swap the contracts out. We don't have that luxury, so there really is no other way. Because even though it was a clean entity and we could have swapped the directorships out or sold the units to an incoming buyer, they still weren't comfortable. You're telling us it's a new entity, but we don't know what the history of that is. We don't know if something's happened, and there's always risk,
litigation risk.
Yeah, that's right. Because if you've done another project in that entity, then some carryover risk. Even though we could prove it was new, they still weren't comfortable. We'll happily take this off your hands, but it's got to be a new entity, and we want to kind of have control over it. So. Yes, but we also said when we were swapping the contracts, we're willing to go unconditional, but we need to be in this entity. So they were getting the sale, they just had to swap it out. So otherwise it would have been back to the market. It probably would have been another, conditional sale, and they had something unconditional if they were willing to swap it out, and that's how the deal got done.
Yeah, right.
Yeah.
Okay, well let's move on to finance. Finance is something that I love talking about, and I absolutely hate filling in an application with a bank. I've just done another lease doc loan now, which is the easier of the bank finance methods. You don't get tortured with 3 or 4 months of paperwork. It's pretty easy. But last year I bought 7 properties. I didn't use a bank once because I've worked out private money, and it's just so much easier to do. And tell us about your experience, bank finance versus now transitioning to private money, which is a bit more expensive, but a whole lot more flexible and can get you into some more deals.
Yeah, it was a game changer for us, although I came into it with eyes wide open because our joint venture party at the time had a really good relationship with one of the big 4. So we'd had to get pre-sales all the time, and it was a little bit clunky, although she had great serviceability. So I was used to the bank model. And one of the guys, the second subdivision site that we ever bought, the guy was getting wrapped up by private lenders. He borrowed money on to do the DA. I think it was like $100,000. He was paying 4% a month. He was getting absolutely slaughtered with the short term stuff. And then he got private money for the actual, for the senior debt for the whole project. And he signed the paperwork, but didn't do what he was going to do. And then they put a caveat on the property, and they never actually. I can't remember if they actually gave him any money. They agreed to some terms, and we came in and I was just like, man, this whole private game is like, wild, wild west. I was like, I don't want to touch it. And I've heard the whole loan to own sharks. And I was like, so I was pretty off it for a few years. I was like, I'm never doing private money. And then had some friends, actually one of them that's doing a tower in Burleigh right now. And he was doing smaller projects at the time. And he was just like, mate, private money's great, and I don't have to pay the bank every month. I was like, what do you mean you don't have to pay the bank every month? And, they don't care about my serviceability. And I'm like, I don't care about your serviceability. Like it was just kind of blew my mind because I'm out here doing a consultancy trust trying to build it up so I can get some serviceability. And they kind of flipped the game on its head where it's like, if the deal makes sense, all you need is equity or cash. Or if you get long enough, delayed settlement, you get some uplift, you can use that to get into the project. And then if the feasibility works, the money will be there. And so that kind of, once I understood that, I kind of got excited and was like, you know what, if I can just structure deals the right way, yes, most people are going to say no, but there's people out there that have got this magic number, land bankers that have been saying they want $10 million for the site for the last 10 years, and all of a sudden it's probably worth 9. You can offer them 10. So they say, I just need a 2-year settlement, and they were going to wait another 2 years anyways. So a land banker's mindset, they're the great ones to go in and get terms. So a lot of Singaporean and Chinese groups that we've bought, like a lot of our longer settlements have been off, a lot of these land bankers that are got a long-term view anyhow, and they just got that magic number. And if you can get there through any means that suits them and you, then you can get a deal over the line. So yeah, that private money game takes a bit to wrap your head around, because initially I was like, I'm not paying 10% or 13% was our first one. I was like, and then I was like, hang on a minute, it's a very cheap joint venture party. I'm giving away 50% of my profits over here, and now I can get into a deal on my own. Yeah, I was like, I'm crazy. So it's once you wrap your head around it, it is really a game changer.
One of the things I like about what you just said is that it is a win-win. Like again on the podcast I was listening to this morning, you helped the lady, you paid her $910 for a site that she only wanted $850. But in return, you said, can you give us 6 months so we can add a bit of value through a development approval process? So you helped the seller make more money. It was a win-win, and it's not just about ripping people off when you're buying their sites.
Yeah, well, we had a great relationship with that couple. I sent them a letter, sat around, had a cup of tea, and like I said, they were going to pay agent commission. We gave them $60,000 more, and they had to wait 6 months, so they were probably in their pocket, $75,000 or whatever it is ahead, or more. And it's a genuine win-win. At the end of the project, once we finished the subdivisions, he sent us a text saying, you did an amazing job. I knew a developer would buy it. We were never going to develop it ourselves. Thanks for, for buying the site of us. So yeah, there is, I think people got this perception that these developers are like, ripping off these little old ladies that don't know what their properties are worth. I've even said to some of these older ladies that we've done stuff, I said, look, I'm not even doing a deal until you've got your family in the room. And, and other times I've just said, hey, you know what, your site, what you want, it's probably worth more as a luxury, residence as it is for a subdivision site. It doesn't make sense. I'm not even going to make you an offer because it's just, it's not, it's worth more as something else. So it's just doing the right thing. If it's not a genuine win-win, we're not interested anyways.
Yeah.
So, yeah.
One of the things I love about property is there's just so many ways to make money, and you're quite clearly a specialist in adding value to land and land subdivision as opposed to building high-rise towers or multiple townhouse things. But even within your one area of specialisation, when I go through the deals that you've done, there are still multiple strategies where you've managed to add a lot of value. And we can just go through a few of them so that the listeners that are interested in land subdivision can see like some of the multiple strategies you've implemented. So the easiest one probably is the first one that you did, the multiple lots on one title.
Yep.
And that's how you got started. Do you want to just talk briefly about why you chose that strategy?
Yep.
And whether there still might be deals out there? It happens still, but it's probably getting a bit harder to find.
Early days, when I was trying to work out what strategy we wanted to do, we didn't have a lot of working capital, and so I did a JV with my parents. I dragged them along to an event, and we worked out their serviceability was about $500,000. So I was like, this was 10 years ago, but it still wasn't. If you're looking for something with development upside, even then there wasn't like heaps of sites for $500,000, especially when you're looking around the Gold Coast. So we ended up finding a site. So I was looking for stuff on multiple titles, So especially in Brisbane, you get your 805 blocks, your 10 by 40s, a house sitting over two lots, and you remove the house and you can sell those 2 lots and hopefully make a profit. Very simple, easy project. I did one in Maruka in Brisbane, and we made it was like 10 grand to put the services on. The first one you mentioned was in Springbrook here on the Gold Coast. It was on 3 titles. House was sitting on 1 title, and there was 2 vacant titles. So when we picked that up, basically I just went to the solicitor and said, can you separate the titles? Because a lot of people amalgamate them, so they just pay one set of rates. And then the moment they were separated, we had it valued. So we paid, I think it was $355, and we had it valued at over $500,000. This was like just weeks after we'd settled on the property, and I was like, this is crazy. So we used that uplift to actually get the construction loan to build 2 houses on the vacant lots, and that was kind of our step into development, I suppose. So it's a great strategy where you don't have a heap of cash. We did one recently in Tamborine Mountain. It was the same thing. It was an old hall and church that was asbestos ridden. Kids had lit a fire in it. It was all falling down with termites, and we just knocked the building down and sold the 3 titles. Like there's still I was looking at one yesterday in Kyogle. There's a property for $1 million, and it's on 6 titles. So I was just looking at it going, is there a way to make a few $100, a few $100,000 just by separating them? It's already got street frontage. So a lot of the time builders will come in and pay what it's worth, and there's no, especially in Brisbane, but there's still opportunities. If you're cutting your teeth and you don't have a lot of capital, it's a great way to get started.
And I'd imagine every single one of those deals, you're going to be using your experience to work out, do we actually build on those separated lots, or do we just flick them? And I think you mentioned that particular one that you did with 1 into 3, you probably wish you hadn't have built on them, and you didn't get that much of an uplift, and it was 18 months of time and effort, and you might have been better off just flicking it.
Yeah, 100%. Basically, what we spent on the builds is what the properties were worth at the end of it. So we didn't make any uplift by putting the build on it.
Spent 18 months.
And spent 18 months in a flat market. And up in Springbrook, the market was very, very slow. Down the hill, things were starting to move a little bit. And so it was that opportunity cost as well. Like we could have taken that uplift. In hindsight, if I was coaching someone that bought that deal to me and they said, hey, I want to build on those 2 tiles, I'd be like, okay, this is what we're going to do. We're going to get a building envelope on those, 2 lots, get it approved, clear the vegetation, make them look nice, keep the little cottage, sell the 2 lots. You've got very low debt on that little cottage, rent it out, and we're going to use that equity to go down the hill, or sell the cottage as well, potentially, go down the hill and go and get into another project within 6 months, 3 to 6 months, because you get in and out so much quicker than what we did, and I got none of that. So that was probably the start of putting me off building. And I've had a lot of, we're doing some construction stuff now, and we've got a lot of friends that have done really well, but I was just like, really started to focus on the land component because it's you in and out so much quicker, and we've found it incredibly lucrative. So
Yeah, right.
yeah,
It's also like I haven't done a lot of development, but I remember when I built 8 bedroom, 8 bathroom, just a little tiny project in Nerang, South Nerang Street, Southport, and I was thinking this thing's going to be done in 6 months, and ended up taking closer to 12 months, and it takes a lot of energy out of your main, like what else you might have been doing as well. In my case, I was spending time out of my real estate sales business to go and keep an eye on these developers, and I got to a point there where I'm turning up at 6:30 because these plasterers and things are charging you as a subcontractor for so many hours a day, and they weren't turning up half the time, and it's just can be so frustrating and stressful turning up. And sometimes I'd be sitting there 2 or 3 days and the builder wouldn't even come at all, because guess what? The builder's got 2 or 3 other projects, and when some emergency happens over there, you're sitting there and they don't even turn up for 2 or 3 days. And it can be, maybe I was not an important client to them compared to some of the other big ticket building works that they were doing. But things can really blow out, become stressful. And at the end of the day, when with the ground up construction, when you get that certificate of classification, it's like, oh, thank God, I've been through that. I want to rest now. Like, that was so torturous.
Yeah.
It's worth it in the end. But yeah, tell us about, like, do you have a partner now that does the civils?
Yeah.
So that sort of eliminates a lot of that risk, I'd imagine.
Yeah, it was great. Like the first JV that I pitched, I had absolutely no idea what I was doing. Like I just found a DA approved site, and me and Shannon had only just met, and I was like, man, I got no idea what I'm doing. I want to get into subdivision. I've done a couple of these little title splits, and I did a DA in Benoa for a dual lock. Had no idea what I was doing there as well, and designed a house way too expensive, so I just flicked the DA on. And then with the subdivision, I was like, Shannon, if you can come in and help manage the construction process, we're adding more value to a potential JV. So I can say, look, I found the site, it's a good site. I'm going to get Shannon to oversee the civil construction. I said, mate, I'll give you a cut of my profits. And he's like, he was working full time, he was just doing it on the side. He's like, yeah, I'll take that deal. He goes, I want to get into property development, and that's kind of how that started. So yes, we'll look to contract stuff out as we scale. We can't be doing everything, but it's nice having someone in that game that we can lean on. But you can develop those relationships if you don't have a Shannon in your life. You get a really good civil engineer that can help price things up and give you a bit of an idea. Talking to some civil contractors as well, get some early engagement, and then if you're in the built form, the same thing. You're talking to a QS. Getting a quantity surveyor to get a feel for the price, or just talking to some builders. Like we say to our coaching clients all the time, you shouldn't tackle a project until you've reverse engineered 10 other similar projects. Where you go, Queensland, you got PD Online or DA Tracker and in different areas, and you can actually see who the planner was, who the engineer, who the architect was. You can find out who the builder, civil contractors, and just reverse engineer it, run a FISO on it, and you'll start to understand, who's doing what and what things cost. You do that 10 times for, let's say you want to do a 4-lot subdivision, go find 4 to 6 lot subdivisions. You do that exercise a few times, and you'll get a pretty good feel for what things will cost. So,
Okay.
Yeah.
Another strategy you've used on multiple deals is option agreements. So whether it's a call option or a put and call, and tell us about how that's allowed you to control sites as opposed to buying them, settling them, paying rates, paying interest on loans from day one. And what's the importance of the option strategy for you, Carson?
Options are great, and it's a good tool to have in your tool belt. You just can't use it for every project. It gives you the flexibility to control a property. If you've just got a straight call option, you've got the right but not the obligation to have to settle on it. You can pull out after, let's say you've got a 12-month option, and then if you exercise that option, normally you settle within 30 days. But you can pull out during that period. So once again, to the example I was using earlier about having a land banker, I might say, look, I'm taking a lot of risk here, and to your point, before it costs money, to say, look, it's not like I'm not spending money on this. If you want your magic number, give me a 12-month runway. And if I can solve the problems or work through it, then I'll buy it at our agreed price. It gives you the ability to, you can put a nominee clause in there as well, because you don't actually own the property, you're controlling it. You can sell that option document essentially to a third party where they come in and then take over the option. I've done that before.
Without you having to pay stamp duty.
Without having to pay stamp duty, which is the big kicker. And then they can give you a fee. So that in that instance, they cut me a check for $44,000 after I'd just finished quit cleaning carpet when I was making $50,000 a year for something that I just facilitated off Gumtree. A guy was advertising a property, and we managed to control it and moving on. So it's a great way to do that. I've used it a couple other times where we've been able to get significant uplifts. And we've got an 11 lotter and a recent 45 lotter that we controlled for a put and call option. So that's kind of like an unconditional version of it, of the call option, where you have to be the seller can make you settle on it.
Yep.
But we had a 22-month call option on one site, but you still have a due diligence period for, I think in that instance it was like 4 months. So we still made sure we were comfortable with it before we went unconditional and committed to the put and call, if you like. So, and then at the end of that period, we nearly doubled the value of the property, and then we could get the valuer come in, value the site, use that uplift to come settle and settle the site and roll straight into construction with us putting in very little extra money, where typically you'd be putting in 35% of the total development cost.
Let's go down two different tracks there with the put and call option deals that you've actually done. So strategy one, I guess, is you're getting a massive uplift when you revalue after a DA, which allows you to borrow from the bank because there's more equity in the land there.
Yeah, you've
done that, but you've also had a couple of recent really big offers just to flick the site after you've actually got that DA uplift. You're not boasting, Carson, but I'm going to ask you directly. Like, some of these numbers are pretty big. Tell us the numbers. Like, you've received some offers on a couple of big sites there with some massive uplift, and you don't even need to do the civils. You can just flick it.
Yeah, well, the one that we did settle on, we had a very big, well-known developer. He looked at the site initially, had the issues that everyone could see, but because we resolved them during that 22-month period, halfway through, they approached us and said, "Hey, can we buy that site off you now that you've fixed the problems?"
Yeah.
And he offered us multiple seven figures, for something that we'd probably spent at that point 100, 150 grand with some consultants working through it. So it wasn't a complete free hit, but I know people that have controlled sites and done less work and made really good money. It's just, once again, finding a problem, solving it. If you can do that during an option period where you don't actually own it, like some of these bigger groups, they're happy to buy sites on 20% margins to kind of fuel the beast that they've created, and they've got to kind of keep rolling through projects. If you've got something, they'll happily take it off your hands. Whereas people like some of our smaller developers, we struggle to, like, what, you paid that and now I've got to cut your check for $2 million. They don't care. They're very unemotional. They're just like, okay, it makes sense. If it was on the market and you're asking, what you're asking now, we would buy it. So the fact that you got it cheaper and we got to give you a check for $2 or $3 million, they don't care. It kind of blows your mind that whole world's out there. But once again, if it's a 20% margin and you've found a project of 30, 35, 40% margin, then you get to click the ticket in the middle.
It's interesting, isn't it? Because those people buying those sites probably employ their own building teams, and they can get that margin with the building. So the fact that it's already got a DA uplift doesn't matter as much to them. But for you and I, where our skill sets are finding good deals and we're not builders, do you think it's fair to say that if you just go online, probably 99 out of 100 sites that are advertised with a DA approval, there's not a whole lot of value in them because they're actually they've already got that uplift. Yeah. And one of the things I like about you is you look for problems. That's where you add the value. You overcome problems and challenges with sites, and that's the key to your success, isn't it?
Yeah, 100%. Yeah, you're right. A lot of DA-approved sites, they're selling on the market for a reason. Sometimes people are just trying to, offload some sites to make a few dollars, and And like I say to our guys, if you're going to do a DA flip, you've got to make sure there's enough margin. If you're doing that as a strategy, there has to be enough margin for the next person coming in. And a lot of these sites, they just don't make sense. So, you've got to be really careful doing that as a strategy, that there is margin, but, like it's incredibly lucrative. I know some developers, that's all they do. They actually don't even develop anything. They just go out there, secure big sites for, manufactured home parks, or just, secure some of these big subdivision sites, just piece the deal together and then sell them on for eye-watering amount. You wouldn't know they exist because they're just mum, dad people like you and me that are just out there making things happen. And it's just, it's crazy. So, yes, we make probably 2 to 3 offers a week to buy 1 to 3 properties a year. So it's a numbers game. It's just I'm very unemotional about it. If someone wants 4 million for the site and I think it's worth 2.5, I make an offer at 2.5. And on our board, half of our sites we've bought 6 to 12 months later, where the market's conditioned the vendor. Sometimes that's the best way to negotiate, is just to leave it, let the market tell them that it's overpriced, and then just staying in touch, like, hey, we're still here, and sometimes they come back around. So,
I'm just having a guess here, Carson, but I'm probably guessing that you haven't bought a site that's already DA approved because you want to get that uplift. Is that true, or have you bought some sites?
No, I've bought multiple sites actually. So the first 2 that we bought, a 3-lotter and 4-lotter in Wurrungree, on San Fernando Drive, on the Gold Coast, were both DA approved, which was great for my early learnings, because I didn't know what a DA was, let alone the whole process. So it kind of helped de-risk it, and it was only just enough margin in it. It was a very flat market when APRA was doing its thing, and it was 2017 when we bought that site with a joint venture party, and it made sense, but it had a lot of issues. Once again, to your point, it was on a really, really steep site, so a lot of people didn't like it. So and then the one where I told you the guy was getting wrapped up by that private lender, that was the second site, was literally next door. So both of those, the second one came to us off market, the first one was on market but had a lot of issues. So we were comfortable with putting in some extra fuel. We made that slope a bit better, and that's why it kind of made sense. And another site we bought on the Gold Coast, had a DA approval for 23 townhouses. We went and turned it back into a land subdivision, because we just think the profit on cost, the margin was actually better as a land subdivision. The overall number was less, but you don't have that huge, capital outlay to do the construction. Actually, there's another townhouse site recently that we bought. We were going to turn it into a 6-lot subdivision. We ended up doing the 34 1-bedroom units, but they were DA approved sites, but we've changed them back. So to your point, most of the time, we've actually bought a few DA approved sites. We got one in the 11-lotter in Jimboomba. That was on the market for like 6 years, but they wanted so much money. It wasn't until the COVID boom hit, and we were kind of watching the prices that we jumped on it. And once we had a 15-month option, and we kind of rode that uplift because we could see the market was moving. So that's why that one made sense. And the 45-lotter was also another DA approved site, but it had the first line of the DA said, you cannot develop this until the poultry farm is decommissioned. And we were 250 metres from the poultry farm, and you have to be 500 metres from the poultry farm. The problem was the DA was going to lapse in 2 years, and the poultry farm had a lease with Ingham for 7 years. So the DA was going to be lapsed. That's why nobody picked up the site. So we went and got an odour report done, got the buffer zone reduced to 250 metres, and unlocked the site. So yes, we've bought DA approved sites, but they've all had issues and warts on them that we've had to resolve. So it's not to say that DA approved sites, you just got to be eyes wide open, because to your point, the majority of them aren't going to work.
Okay, so what I've just learned from you there is if you're going to buy something DA approved, if you're a builder, you got your margin anyway, that might be fine, just pay fair market value. But if you're a developer, you've either got to provide further uplift, or most importantly, I think what you're telling me from your experience is make sure you buy from a motivated seller, even though it has a a DA in place and that uplift has been there. So someone who's been on the market for 6 years is probably getting closer to being motivated to sell.
Yeah,
And they've probably had a bit of feedback from the agent that, hey, this is not worth as much as you think it is.
That's right. And once again, the old land backers, they were happy to wait on it. They actually carved off the block, that 11 lotter, the one that was on for 6 years. So the DA was live in perpetuity, because if you stage it, once you've carved off a bit, it doesn't lapse.
Yes.
So they were happy to sit on it and just wait. And that's why we're happy to facilitate a deal there. And we actually cleared the trees and changed the DA and did lots of things before we settled. Because once again, to your point, the cool thing about property is basically what two people agree to within reason you can do, which is awesome. So.
And you've got examples with your experience there, not just with options, but going to normal contract, but with a long settlement, which gives you time to provide an uplift. Can you tell us about a deal that you've actually done, just normal contract, but with a long settlement?
Yeah, that 4 lotter where you said the agent said it was worth $850 and we ended up paying him $910. That was just a 6-month settlement where standard contract. Once again, we were DA approved before we settled on the site. Even though we paid him $60,000 over, we had it valued just under 1.2 before we settled. It was a fast track DA, and we were able to get that approved. We've got one at the moment down Byron in a town called Bangalore. We've got a settlement. We're still in DD right now, but we're like 99% sure we're going ahead with it, and we'll settle just before Christmas. So we can hopefully get it DO approved, or at least very well progressed. So once we settle on it, it's only a short holding period, and we can demonstrate to an incoming lender, like, hey, this is what we've lodged. It's going ahead. Here's the RFI from council. It's we've got a few things we're massaging, but it's working. So because time is money, and like holding costs will kill you. So by having those delayed settlements can be the difference between a feasibility working and not. Yeah.
Okay, and just moving on, you have a larger scale joint venture at the moment, which you probably didn't have enough money to do yourself, where the joint venture partner has contributed the land. This is, it's just really, I find this really exciting to talk about deals where there's a deal there, but like you think, oh, geez, there's no way I could ever have enough money to buy this block of dirt, but you've found a way. Now maybe you've got a bit more credibility, more runs on the board, and someone trusts you to do this. But this is really exciting to me, is thinking bigger and doing deals that seem too big to be in your potential. Tell us about it, because I love this.
Yeah, like there's a vendor at the moment. He's been trying to kind of get this site approved, and been 4 or 5 years battling away through busy professional, owns a very successful big business, and it's just he's been sitting on it for a long time. So he's considering, surrounding developers have been making him offers, and we heard about the offers that it was being made, and we said, look, yes, you could sell it for that number, and it was big number. We're talking, multiple 8 figures. And we said, or why don't we'll buy it off you at $140,000 per lot of what we get approved. We'll run the approval. I said, you pay for it, because so he's paying for the consultant fees, but we're actually we're putting in the sweat equity to actually increase the value of his property. So it's, let's just say it's worth 20 now. We're going to say, look, we'll get the approval, and then we're basically going to pay you 30 for it, and we'll do the work to get there. Yes, you got to put in the $1 million to get the approval, but we're going to pay you an extra 10, and you're considering the $20 million offer over here.
Yeah,
we're going to then, pay you the 30 million plus, and then at that point, we're going to joint venture, and we'll pay you that 30 million out of the profits, and we'll split the profits on top of that. So there's potentially $50 million profit in that deal on top, after paying him 30 million. So he's getting an extra 10 million than what he thought, plus another 25 million. So he's like $35 million ahead, of what he was going to sell it for, which was already a really great win. He's waiting another 5 years. So from him, it's a genuine win-win, So it's like we're getting a great outcome. And you can see we've got some experience now to kind of do this kind of thing. And if it's a win-win, then people are open to it. So it's just being open to asking the question and taking someone on a journey. And, you know, if you've, and like we haven't done anything to that scale, but this is the best thing about property development. Go employ the people that have.
Yeah.
So we've just gone, upgraded the town planner, upgraded the engineers, you know, find a team that do this scale development and engage them to do it. So there's an expert for every area. So we've never really looked at big urban design plans before because of 250 lotter. We've normally just got an engineer, a surveyor to scratch up some plans. Now there's different layers to it and different scales and infrastructure that needs to come in. But, you know, once again, we'll just employ a team that has done it before and happy days. It's a win-win.
Carson, what I love about that story is part of happiness in life is about performance and growth and something like that. Like I can imagine if I was in your shoes, you'd probably be going home at night and thinking, wow, what a great deal. We learned something new. We're helping someone. We're making money out of nothing. Someone else is contributing the land. And what satisfaction you must feel instead of going spending your own money to buy a site and risk all that money. You found another way to do a bigger site, grow your thinking and back yourself to go and do it. Did you feel happy? You must be happy about doing a deal like that. It gives you a buzz, surely.
Oh, yeah, like I love the chase. You know, I say property is like modern day gold mining. There's you know, it's kind of like looking for that next nugget. I love the chase and the excitement of the deal, but you know, I love the partnership as well. Like the vendors, like, you know what, I'm stoked that everyone's getting a lick here. You know, like, and the bigger the deals, the more commercial generally the person is anyways. Like, and it's you can kind of take them on a journey. They can see the win-wins. I like dealing with business people as well. So, but yeah, look, it's great, but it's early days as well. And I've learned in this game, I've had 2 unconditional contracts fall over in the last little bit. So I've learnt not to celebrate too early. You know, getting a deal over the line is great, but then the work comes. So
yeah, right.
Yeah.
So there we go, a bit of philosophy there. To find gold, you must dig through a lot of dirt. And I can tell you, I haven't known Carson a long time, but he is such an easygoing bloke, but he's like a duck on water. He looks cool and calm, but underneath those legs are paddling like crazy. Like he's very busy. He's working on lots of projects. And Carson, just before we go on there, like you have sort of transitioned one level further now with this site in Coomera. Because I say you're looking to transition one step further because you're looking to hold some property and generate passive cash flow. And that's another exciting sort of transition where instead of starting every year with zero income, you're actually starting to look at building a portfolio where from day one you got passive cash flow. So tell us about your transition there into this new 34 one-bedroom site in Coomera.
Yeah, well, I admire what you've done and be able to create that passive income. That's always the end goal, right? But I had a mentor say to me early days, if you've got a choice between a cash flow positive property or a deal that's going to make you a chunk of cash, grab the chunk of cash because it's easier to buy a commercial property at a 6, 7, 8% net yield potentially than it is to find $1 million deal. So because we got good at finding the chunks of cash, we've just continually did that, and we knew that at some point we'll pay the tax and just buy a couple of commercial properties and it's done. So because we've focused on generating the projects, and now we're transitioning into we've come across this site where it was a 1 acre medium density site, and we were like, once again, not a huge fan of built form, so I was like, let's just do a 6-lot subdivision, community title subdivision. It's what we're comfortable with, what we're doing. My business partner was like, where else are we going to get a medium density site where we get a chance? We bought it pretty well. Why don't we I was like, okay, well, I guess let's try and do some built form as well and do some, maybe some 1-bedroom units that we can keep. So we're like, okay, well, let's do a 3-lot subdivision at the front and then we'll just keep the balance. Land will be unencumbered and then we'll do it. And then we're like, we've got enough projects happening, let's just do the whole thing. After we had the pre-lodgement meeting, council were so supportive of it. So we lodged a DA for 34 1-bedroom units, got approved in 3 months. Council are actually really keen on affordable housing at the moment. And we're providing a product type that nobody's doing. If you go to Gold Coast and look at new 1-bedroom units, I think they start at like 780, 800, 850. Like that's a starting point. For there's old existing stock, but if you want new stock. So for us, we looked at it and went, okay, we've got 2 blocks. We've got a block of 14 1-bedroom units and a block of 20 1-bedroom units. If we can sell the 20, we've worked out we'll have about $2 million debt on the front 14, and there's obviously great cash flow at that point because we just had a rental appraisal of $650 a unit. So yes, there's going to be some debt, but you got 14 units at a very low debt, then it'd be great. And then we've got that equity that can still draw down on. So we want to start. Yes, we'll do some commercial deals at some point, but if we can keep some stock along the way, we're at the point where we're like, okay, let's try and keep some of our stock.
That's to me, like, I just can't wait to see your progress there. And if I can give a plug to one book, I mean, everyone's heard of Robert Kiyosaki, but the best book I've ever read is Cash Flow Quadrant. And after reading that book, it's not about, can I make $1 million or $10 million next year in my job? That book really teaches you to think along the lines of, if I don't work next year, how much money have I got coming in from my property portfolio or my share portfolio? And you're on that track now to have X amount of income coming in next year before you get out of bed. And if you can continue upping that figure and just keep track of it, it's just so exciting to actually go down that track, and you're already starting that, getting your big chunks, but putting it into assets that produce passive income. And probably just as important is you're probably going to have a risk management there around not doing what my dad did, because he stuck to the development thing and he built some blocks of units, had a win, then he built a bigger one, and then he put all of his assets into this big property development because he had a couple of wins and the market turned. He lost everything. Yeah. And by putting a little bit aside into some cash flowing properties, you're probably not going to make that mistake, Carson.
Yeah, I was lucky enough to live in Byron Bay when GFC hit, and I'm grateful to have seen property, especially at the top end of the market. Like Byron Bay had half price sales at the top end. E-Frame Island, I remember seeing the ads, paid $3 million, now 1.4.
Yeah.
Like that, the top end got slaughtered. Like your cookie cutter stuff, not as much, but so I'm very mindful of that. And a lot of people talk about the 18-year property clock, and you say, okay, it's about now. And so we constantly have this conversation in our office, like, if a GFC hits tomorrow, are we good? So we've structured things that we're comfortable with our debt levels, and we could ride out a 4 or 5 year period if we needed to with what we've got on right now. But we're very mindful of that. So it's a good point that you make, because we don't want to get into this. Because like I said, we just pay ourselves enough to live on. My wife spoke to someone the other day, and they're like, my brother is a property developer as well, and she's like, we're going to get to a point and then we're going to take some off the top. It's like, no, the deals just get bigger and bigger. Like it never, you never actually make any money. Yeah. But we've made a conscious decision that what we've got on the board at the moment, we're going to try and take some off the table, buy some passive income, assets. So we're kind of, we're good, and then we'll build again from there, like as a phase 2. So we've been going hard. Like I said, we haven't taken a chunk of cash. We haven't taken one dime for the last, 10 years basically out of the project. We've just reinvested all enough to live on. And then we'll try and get a bit of passive income, get that sorted, and then build off there. Because you're right. I've seen a lot of people, greed kind of gets in the way, and you said, you have one win, you go, oh, if we can do 10, let's do 100. And, it can all unravel very quickly. I've seen in some of these property communities, there was a guy that had a few wins, was raising money off investors, and I watched a young guy in his late 20s lose $30 million of mum, dad's money in one property group. And I watched it happen in front of me. We were getting the phone calls as it was happening. People lost $500,000 of their super, $200,000 of all their savings. So I've seen it go bad, and I'm grateful to have, I guess, seen some of that carnage happen in front of me. So we're very conscious of that. But it's a very important lesson to make sure you don't just, get too greedy and get ahead of yourself.
Yeah, that's good advice, Carson. Yeah. Carson, wrapping up now, you find, fund, develop. You're teaching people now. If people listening to the podcast want to contact you, how should they find you?
Yeah, if you Google unemployable property or on any of the socials, send a PM or reach out to myself personally. So we've got a great little program there that kind of takes you through the A to Z, and you've kind of got access to one of us as a coach to kind of hold your hand for that process. It's like I said before, the good thing about this game, there's an expert for every area, but you still need to be the orchestrator. In early days, when you don't know what you're doing, you can fast track that significantly if you've got someone holding your hand. And that's kind of, I think most of the time we're telling people not to do deals as well. So it's the deals we talk people out of as well, because if you do one wrong deal, it can be painful. But yeah, reach out to us, and I'm happy to point you in the right direction. And yeah.
Okay.
So.
Well, look, I can say safely from knowing Carson just a short period of time, it's great to make money, but if you can do it with people that you like and people that you enjoy spending time with, it's easy to recommend this guy. He's just a good bloke. He's got plenty of knowledge. Get in touch with Carson if you're looking for a mentor with land subdivision in particular. Thanks for listening to the Andrew Wright Property Podcast. Press subscribe. I haven't got enough subscribers, funnily enough. Subscribe to Unemployable Property and tune in on the next podcast. Thanks, Carson.
Thanks, Andrew. Appreciate it.
Thanks, mate. Thanks for listening to the Andrew Wright Property Podcast. This is all about building a community of like-minded investors who can share real-life stories, experiences, and collaborate with a view to helping each other. Join us. Get in touch through the link in the show notes. I look forward to you joining me on the next episode.